Hello, my rocket competition friends. Let's do some more of that charting with precision and avoid indecision and other things. I'm not much of a rapper. Let's just dive straight on into the charts. Yes, so welcome back. This is the Ethereum Perpetual Futures contract on the 4-hour chart with BitMEX just now. And if you watched my Bitcoin video, you'll know that I had a bit of a hiccup here, and I lost all of my oscillators and indicators on the chart, so I've had to go back through them, setting them up again. And I suppose I'll continue the theme here by adjusting the settings here in my RSI down to what I usually like to have it at around 14 and 12. Now, of course, you can see it makes a big difference, really. So all of these things are up to you. This is just the particular settings that I use with regards to cryptocurrency. So the ones out of the box were 22 and 12, and you can see, of course, that so it gives you a different picture really overall. And if we put it back to 14 and 12, and you can see then this is a bit more sort of exaggerated here in terms of what's been exaggerated is completely the wrong word there, but you can see that we went up into this bullish control zone all the way back down to retest off of the bearish control zone here, and that's kind of, to me, makes a lot more sense when I look at the price action compared to how it would be at on the sort of out of the box settings here. So if we change the length of it to 22, I don't know, it just doesn't seem, it's not as, it's just, I don't know, I use 14. And yeah, so there we go. There's one little thing. Maybe in the next video we'll change some of the colors. I don't know, but getting back to normal now, and that's all good. So anyway, what happened? What actually happened over the last couple of days since the last video that I put out? Well, let's go up to the 24-hour chart to sort of sum this up. The last video we put out here was on Friday, and we came out here and broke out of this this triangle formation that we had, and we said when we were looking at this beforehand that we wouldn't expect it to necessarily make the full measured move. And of course, it really depends. It's subjective, you know, where you would draw this in. I'd say that was your full measured move there. It wouldn't necessarily make the exact full thing, but it looks like it's done a pretty good job of it overall. Of course, that's drawing it from there. If you were to have drawn it from here, then it's less, you know, and like there's a degree of subjectiveness to this sort of this technique here. But you know, we more over the period of the couple of days, we kind of more or less got the measured move, and that was a good thing overall. So we thought, you know, with the momentum and whatnot, that if we got that it could easily just fall right back down again and retest off of the downward sloping trend line here that we have. And it depends on your accuracy drawing this thing exactly where it would be, but you can see just before, the way I had it before, it was cutting through the tops there. Now you can see it's just like that's probably a bit better position wise. It's a little bit closer there as well. Anyhow, that doesn't really matter. The overall theme is that we came back down to test off of this. Now, what were we looking at in terms of numbers? Well, if we kind of thought, well, if we're breaking up above 230 here, then we're probably breaking out of this symmetrical triangle. So that happened, and then we said, well, where's the next sort of target here? It would be 240 or so, and that's where you could get rid of some of your position if you were just sort of short-term trading this here, and that's the next profit-taking line. And of course, the next profit-taking line after that was, in our heads, you know, we had it up here at 256, where this horizontal solid line is. The prices went up as high as 253. If you were sort of holding out exactly for that line, that could have been considered greedy, I suppose, and you could have possibly have got out of that. Or maybe when you saw that, maybe if looking down, let's look down at the time frame actually and see, well, could you have had some sort of warning signs here? Do we have almost got the, let's just see if this actually looks, if this looks divergent, if out of the box settings, how does this look? No, it's more or less exactly, it's more or less the same in terms of the divergence. Just thought that'd be interesting, but anyway, yeah, you can see that well, there wouldn't necessarily have been like a great deal of warning signs. What about on the MACD? Indeed, actually, there was warning signs on the MACD here. You can see between these two highs, we've got the bearish divergence. So the MACD was giving us our warning signs. What about the stochastics? There's just this little time frame here. No, the stochastics weren't really doing it for us, but the MACD was giving us a warning sign. It's saying, hey, you know, there might be some divergence on the go, and we didn't make it the full way up to 256. But you know, you had that measured move there as well, anyway, that indicated that we probably wouldn't make it the full way up to that 256 level. That's just another area that where we have a line. You know, we've had one for a while there, quite a while actually, and it just gives us a rough guideline for where the prices could go to. I wouldn't use, you know, that as an exact destination, really anyway, and instead I'd be looking towards various other things. So anyway, got the price going up to there, that's all good, and then the price coming back down here to the sort of mid 220s level and around this descending support trend line here that you've got. That's kind of also fine. You know, we've sort of, let's just say if that's where it was meant to be at. You know, it's a subjective thing. In fact, rather than have this on here at all, I'm just going to get rid of it now. But basically, the idea is that we came down and we've retested off of that, and that's kind of more or less what we predicted. What else do we have in that area? We've got the 50 simple moving average and the 200 exponential moving average, and we have this 230, the horizontal support line in that 230. So you can see me just making that decision there to get rid of that symmetrical triangle off the charts and make things a bit cleaner looking. Cleaner looking. I mean, this is a mess anyway. Was probably the right decision, at least in my opinion. So so that's what we're looking at there. What in terms of the RSI, we've come back down, and as you can see, we've touched off of, in terms of the settings that I use anyhow, the bearish control zone, and then of course we've been rejected off that on our first pass as ever, but also we're hoping that that's the only pass, you know. It would be nice to see how see if the prices can come back up towards this neutral line and try and test off of that there, and probably would see some sort of confluence in amongst these other moving averages and around that time. See how things respond around the 21 moving average on the 4-hour time frame. That would be interesting. But overall, really, things have kind of more or less gone to plan, and things remain more or less the same. I can just go back to the 24-hour chart to really kind of sum up here, because there isn't really a great deal to be looked at overall. The price is currently operating between this 230 support line. I mean, right now, well, what's the price right now? 231. So you know, we're right in there at that area, and of course, if we're able to open and close on a daily time frame up above 241, then I'd be looking for 241. Try and get some more of that 241 Ethereum for a move up towards that 256 area again, of course. And likewise, if we open and close below this 230 line, then I'd be looking back down towards this 221 area and questioning whether or not we would need to use that as support again. In terms of whether or not that would shape anything out as a higher low or a lower high or whatever, it really depends. You know, you could be looking at wicks coming down here and bodies closing up above it, in which case you'd get sort of the best of both worlds. You get a higher low on the price action, and you'd also get your sort of your maximum entry there, or exit, depending on what direction you're sort of playing this market. So, you know, that's kind of what we're looking at there overall. And in terms of like things like 4-hour candles, I'm not trusting them either way. As you can see here, the 4-hour candles open and close several times above that 241 area. And while it did offer you a good in and out, and I'm not a financial advisor, that's financial advice, of course, while it did offer you a good in and out in terms of 241 and then back out at sort of 253, you could have just taken a $10 sort of move there if you'd wanted to, and got out at 251, for instance, or 250. I'm not a financial advisor. Then you know that's been great and all on this 4-hour time frame, but like I say, you know, it needs to be more than a 4-hour, really, in all honesty, opening and closing up above it in order to give you that confidence. And you can see here the 12 hours more or less, the same sort of scenario. You know, it did it. You had this open and close here, but it was quite sort of, it wasn't the type of candle that you really want to be seeing doing that. And also then the follow through on the subsequent candle took us right back down below it again anyway, which then added up to this 24-hour candle that we had yesterday. So we had quite a lot of action overall in the day yesterday. What was the entire range? Let's just check that out. Down there, so you're talking like nearly 6.5–7% just in the one day, really. But if you're looking at the potential for moves, you know, I think if you're getting over 5% on a move, then you're doing really well. Like, you don't need to be super greedy. The overall, you had nearly 11% there, 10.9 really, if you were to sort of taking it around about this area up towards around about the top, and that would be sort of quite greedy going at that 10.9. I think most people, especially if you didn't actually get a good trade and you're looking back back at this now with a degree of regret. Most people would be happy with a 5% move, really. You know, and if you could do a 5% move every day, just once a day, then you'd be very, very wealthy very, very quickly. So let's just try and, like, you know, never get too carried away with anything and to go too FOMO, too greedy, too fearful, or too much, like, you know, blinded by the light of the moon, and keep our heads screwed on. And that's so on that basis, what we're looking at, well, you know, we're still inside this descending broadening wedge area. We had a period of consolidation which potentially is broken out towards the top side, you know, and is potentially being retested here, back tested, and potentially then could lead towards us going up and trying out again and around this area where the descending broadening top trend line is. And it's all panning out more or less according to schedule as well. We thought this would be coming down here in and around our 256 level by around about the time the prices might come up and retest that. Of course, we're also being cautious and saying that, well, like, you know, there's plenty of areas for us to manage our risk around at 230, 220, these moving averages here, and of course this green line, which is this Fibonacci retracement from the highs in June to the lows in December of last year at the 382, which is in around that $212 level, of course, as well. We've seen the prices come down several times before. If we were to break down below that, then I would fully expect us to be trying down at that 200 level again. And you know, it's up to you how you go about managing your trading in amongst all this area. But I think that kind of more or less will do it for now. Thanks so much for tuning in. If you're new to this video, you've made it through to the end, you're a bona fide rocky outcroptician, and you do indeed chart with precision, and you lack that indecision as we try to try to make stupid raps up. And so welcome to the family. And if you have subscribed for a while, then, you know, thanks so much for tuning back in. I'm sorry I couldn't do a video yesterday, but, you know, such is life. And yes, so I'll be back again tomorrow with more content. Thanks so much for tuning in, and I'll see you next time.